Hello and welcome back for another edition of London Direct. The sell-off in emerging currencies has really shaken investor confidence this week, but what triggered it and what does it mean? When I've been speaking to Alistair Cotton from Currencies Direct. Okay, Alistair, did I miss anything with this EM story? I didn't see a Newswire story saying Chinese GDP forecasts have been cut. I didn't see any big IMF downgrade or a Moody's downgrade. What's triggered this fear over emerging markets?
Well, I think it's movement of large-scale capital flows, and the reason for it is because last year in the stock market and across almost every asset class apart from gold was a really, really good year, and it's natural to expect at the end of year some sort of rebalancing. And because the institutions that are doing this are so huge, it's going to take some time to do. And it's given that rates are going to rise in the US with tapering coming, it's natural that some risk is taken off the table by these institutions, and that means emerging markets.
Yeah, but who are these institutions? Because I've read all sorts of spurious commentary over the last day or two, people trying to figure out who's moving this money. But who do you think are the people moving this money? I
think probably BlackRock will be a big one. They've got about 15 trillion or so under management. So if they move a significant portion or even a small amount of that money, it's going to have very large ramifications. The issue is that the way people invest in the Western world in emerging markets is through Western funds. And if the institutions that control them or investors start to redeem that money, then it's going to have a massive impact on the domestic markets. They don't have the capital protection really to sort of withhold, to stop the capital coming out very quickly. They might try to, but they don't, and that's going to have ramifications for interest rates in that country and the exchange rate.
Has it stopped now? Because that's the other thing trying to work out is that where does that money movement start and stop, and where does the speculation and the worry start from there? Well,
with my argument, it would be that it probably has or is coming to the end of this rebalancing that's going on. So it's possible that it may start to settle down now. But in the absence, as you say, of this is dependent on some sort of terrible data story not coming out. The story about the Chinese being suspending cash withdrawals, it's that sort of market. It turned out not to be true, but it spooked the market for 25 minutes. You know, people are looking for negative data. Hopefully this rebalancing is complete and it should settle down, but I think we are in a sort of environment where negative news is having a greater impact at the moment.
Obviously Currencies Direct, you deal with currencies, so what are the ramifications there? Obviously we have the emerging market currencies, but also we have the safe haven plays going on at the moment, and also you can even look at the commodity currencies as they're linked to the EM picture as well. So how are we going to see it play out in terms of currencies?
Well, I think you need to make a distinction in terms of I'm going to call them the basket case currencies and then the rest of the emerging markets. And what I'm talking about here is the Turkish lira in particular. Warren Buffett famously says you only find out who's been swimming naked when the tide goes out, right? So, and we're looking at the currencies that are depreciating significantly are the ones where the central banks or the market thinks the central bank does not have enough capital to stop the outflow, stem the flows. And that's why the Turkish central bank is meeting at 12 o'clock at night. Why they're going to have to jack up interest rates, why they might have to go to the IMF for a loan. They need to work out where they're going to get the money from to stem the flows. First of all, whether it be the international markets or an institution that lends them the money, and in that sort of basket probably is the rand as well. We've got these big protests going on. Hopefully they're going to come to some sort of resolution. But you're talking about one of the largest rand exports in platinum that have just been under pressure at the moment. So how do they pay their way as a government, if you see what I mean? And then the rest of EM, I think, is partly this rebalancing story. So we've got to separate them out before we sort of talk about each, I think.
Just to finish off, we should move on to the Fed meeting, which is happening this week. Happening now. Does this have ramifications for them? Because obviously this is all linked to tapering. Do you think they're going to take this current situation into consideration? Because it's in no one's real benefit if the emerging markets really see a big sell-off.
I think that's true, but I don't think the Fed can back out at this stage. last year in July, where Mr. Bernanke walked the markets up to tapering and then walked them back again after they sort of spat the dummy out of the pram. I don't think they're in that situation now. They have to continue with the tapering programme as is. I'd be very surprised indeed if there was any change, given this is Mr. Bernanke's last meeting before the handover. So 10 billion we expect. If they don't, we're at the end of QE. I think everyone realises it, and it'd be a huge surprise if they changed it in any way. This is US domestic monetary policy. I'm sure they do think about the emerging markets, but this is primarily US based, and they've got to make their decisions on the US economy only.
Well, thanks to Alistair. Stay tuned to Dukascopy TV for more interviews. But from London, goodbye for now.